In today's video, I have a small cap data center stock that's sitting right at a major support level. The last time it traded around this price, the stock went on to rally more than 100%, but this time there are several major catalysts just around the corner that could make the next few weeks very interesting. Today, I'm looking at TSS Inc. It's the first time I've covered this company on the channel, and while it's definitely a higher risk stock, I think it's one that's worth taking a look at before the September catalysts. In this video, I'll go through the technical charts, what the company actually does, why it's benefiting from the data center boom, the upcoming catalysts that investors are watching, and whether I think that this could be an attractive risk to reward opportunity at today's price. So with that said, if you appreciate these videos, then don't forget to like and subscribe to the channel. I'm aiming for 500 likes, so help the channel out, help me hit that goal. Now let's get straight into it. First of all, looking at the charts, TSS is currently in a downtrend. The price is once again testing a key support zone around 875, a level that has been repeatedly shown to be a strong support level over the past year. Previous rebounds from this level have led to meaningful rallies, suggesting buyers continue to defend the level. Should the stock find support here again, then the next level of resistance sits around 1250, where multiple failed breakouts have topped out. Now don't let this chart fool you. This is a very meaningful appreciation. That's about 40% between the current price and the first resistance level. A successful move above this level could open the door to a retest of a major resistance around $16.90 to $17, which again has been rejected on several occasions, but it is almost 100% above today's price. On the downside, should we go below 870, there is a risk of a decline towards the 52-week low of 687. Now, from the risk-reward point of view, the stock is currently only $2 above its 52-week low, while it's $13 below its 52-week high. While its all-time high that was set last year was above $30, so I think the risk-reward balance here looks good. But what do you think? Let me know in the comments. However, it's the upcoming catalysts that will have more impact here than anything else. So before we look at that, it's important to understand exactly what TSS actually does. TSS Inc. is a US-based technology infrastructure company that provides integration, deployment, and lifecycle services for high-performance computing and data center equipment. They specialize in custom-built, scalable solutions that streamline the deployment of advanced computer systems. They were originally founded in 2004, but the company has evolved from providing technology solutions and facility services into a specialist supporting AI, cloud computing, and enterprise data center infrastructure. The company's primary mission is to simplify the deployment and management of advanced computing infrastructure, enabling customers to bring new computing capacity online quickly and reliably. Rather than manufacturing servers itself, the company works with leading hardware vendors to prepare systems for customer deployment. TSS primarily serves business and enterprise customers rather than consumers. TSS offers several infrastructure services, including system procurement and integration, which is building and testing complete server and storage systems before deployment, rack integration, installing these servers, networking equipment, and power systems into complete rack solutions, deployment services, lifecycle services, and logistics services. These services are particularly valuable because they allow customers to deploy complex AI and cloud infrastructure more quickly while reducing installation risks and downtime. Looking at the investor's presentation, TSS is in a strong demand market with multiple growth levers, and they are growing their offerings, capacity, and partnerships. For full year 2025, they had revenue growth of 66% and EBITDA growth of 83%. Their offerings can be split across three main sections: procurement, integration, and facilities management. From the revenue mix over the past 2 years, we can see that revenue has primarily come from procurement, but their systems integration revenue has been increasing. And this is because systems integration and facilities management are far more profitable despite having a much smaller share of overall revenue. 53% of gross profit in 2025 came from these sections, despite it only accounting for 20% of the revenue. So this is a huge potential growth area for the company. And there is a huge market opportunity here worth trillions of dollars across edge computing, data centers, and the global server market that is expected to grow at a compound annual growth rate of 25% over the next 5 years. TSS has seen huge revenue growth in the past few years alone. And while revenue so far in 2026 is slightly below 2025 levels, they are expecting another big jump in adjusted EBITDA with their outlook set at between $20 and $22 million for 2026. And I'll be talking a little bit more about this in just a moment because there has been some developments that are leading up to a big catalyst that's coming soon. TSS have just released their Q2 results, in which they stated that systems integration revenue grew 46% and facilities management revenue grew 84%. Reduction in total revenues reflects shift from lower margin procurement to higher margin systems integration and facility management business lines. But this is important. The company began deploying capital for its planned $17 million investment for readiness for the next generation of AI data center technology, which is expected to convert into higher systems integration revenues beginning in the third quarter of 2026. So this is only days away. And this official document does state that the renovation to their facilities is set to be completed on September 1st. So this is a big day for the company, but it's also the same date that Dell is set to release their earnings report. Now, Dell just happens to be TSS' biggest customer. Pretty much their whole business revolves around Dell. And this expansion of the TSS facilities was done at Dell's request. During the TSS Q1 earnings call, the CFO stated that our primary customer recently requested that we invest roughly another $17 million into CapEx to support the next generation of AI racks. We've just started that process and expect to add these assets between now and the third quarter. Once that investment is complete and the assets are put in use, we expect the revenues we earn from our primary AI systems integration customer to once again increase over the next several years. So Dell's earnings report on September 1st is a big day for both companies. Wallstreet analysts fully expect the company to provide strong, forward-looking guidance based on several expanding data center metrics. So with Wall Street analysts being bullish on Dell, what do Wall Street analysts think of TSS? Looking at MarketBeat, we can see that there are 4 Wall Street analysts covering TSSI stock. The consensus price target is $16, with a low of $13 and a high of $20, while 2 analysts rate this as a hold, 2 more analysts rate this as a buy. The most recent of these targets was set just over a week ago by Needham analyst Matthew Calitri, who lowered his target from $16 down to $13 just before the stock tanked by over 20%. For such a small company, there is a lot of institutional activity happening around this stock recently. If we look at Fintel, the ownership flow is dominated by buyers. Institutions are holding a significant number of shares. Institutional ownership is at an all-time high, having dipped a bit over the summer but taken another huge jump in the past month. BlackRock and Jane Street are the company's 2 largest institutional shareholders, and both have increased their positions recently, but there has been much larger increases from smaller firms such as Silvercrest Management, D.E. Shaw, and Algard Global, who recently increased their position by more than 3,000%. Overall, I think TSS is one of the more interesting small-cap AI infrastructure plays right now. The stock has pulled back, but is sitting at a key support level. They are shifting to high-margin business lines and have major catalysts and expansion just days away, which makes this very interesting right now. Dell's earnings on September 1st and the potential for improved guidance around AI infrastructure demand, the next few weeks could be pivotal for the company. As always, this isn't financial advice, it's simply my own research and opinion. I'd love to hear what you think. Is TSS on your watch list? Do you think this is a buying opportunity, or are there better AI infrastructure stocks out there right now? Let me know in the comments. If you enjoyed this video, then don't forget to hit the like button and subscribe if you're new to the channel. It really helps support the channel and lets me continue bringing you research on under the radar growth stocks just like this one. Thanks for watching, and I'll catch you in the next